This is a chart I showed you yesterday in which I was bold enough to say that I'm going to develop a system, a process that will give me the ability to predict what the stock price of those stocks that I choose to own will be in the coming year and years. And I went through Apple, Google, Meta, Air Systems, and Amazon and showed you their history relative to their stock price change, their earnings per share, and their earnings per share growth. And I said that I think you can pick up a pattern of how Wall Street judges these based on the data that they have available, that you can predict what Wall Street's going to do in the price. And some of you said that that's silly. There's no way anybody can predict a stock price. Well, I beg to differ with you. So I have another stock that I hold that I wanted to examine because I wasn't sure exactly if it was strong enough to move forward. It's Axcelis technology, ACLS. And what I'm showing you here is I've added some columns. First of all, I added what exactly is this stock price that I'm reflecting the movement of. And then I put in revenues in billions of dollars. Why I did that was I went and I listened to their last earnings call. And I heard their CEO tell me that their goal between now and 2025 was to have a company that was generating $1.3 billion. So I immediately went and looked and said, well, what are they making now? And they're making 1.13. They didn't tell me what they expected to make in 2024. They just said that by the end of 2025, they expected to make $1.3 billion in revenue. So I just divided it kind of in half and said, okay, because 2024 is not going to be as good a year for a company that's in the business of making power devices. These are devices that go to the foundries and go into the semiconductors, and then they also supply silicon carbide. And then the other thing that struck me is they do 46% of their business in China and 15% of the United States, and then they're growing in Japan. But they aren't doing that much business, relatively speaking, in the United States. And I said, that's kind of interesting. They went on to say that they felt the Chinese business was growing, and I thought, that's not what I understand. I understand the Chinese economy is in deep trouble and things aren't going well, and the semiconductor companies are not running at capacity. So I saw something there that didn't fit with what I thought was happening. So I said, okay, I want to go through this and see if I can create a pattern. And you see it here. What I see happen is I see a stock that is down 61% in 2011. And I ask myself, why is it down? Well, Wall Street believes the future is not so bright. So I look ahead a year and I see that Wall Street says that believes that their revenues are going to be down. And in fact, they are, as you can see, the revenues went from 31 million to 20 million, which is a 36% drop. This is, I believe, Wall Street looking forward and saying they've got some trouble in front of them. Their revenues are going to be down. Their earnings are going to be down, and they were. And so the price is down. So in essence, what's happening is the system's working backwards. The system is forward-looking. Wall Street is saying the future is not going to be bright for this company in 2012 and predicted it correctly and brought the price down. Then it came into the next year and said, well, it's going to be better, but it's not going to be all that much better. The revenues are going to go down again, but the earnings per share are going to go up. So they only give it a 3% increase in price. And then they go forward again and they say things are now brighter. We believe revenues will be up about 4% and earnings per share will be up 37%. And they reward them with a strong price. So that's how I see it happening. So then I go up to 2019, and I see the same thing happen. In 2018, the price is down because Wall Street believes the earnings per share are going to be down, and they were, and the revenues are going to be down. And that's how Wall Street looks forward and pushes the price down before the actual happening. So that brings us up here to today. And I've colored that blue because this is blue sky territory. This is a company telling us what they're going to do in the future. And they're telling us their earnings are going to go up from $6.77 to $8.88. And that's going to give us an increase in earnings of 27%. But on the other hand, we don't know exactly what their revenues, they aren't telling us, but Wall Street believes that this isn't true. Wall Street believes that the earnings are going to be down both here, and so they're punishing the stock price. What I'm saying, based on past performance, their earnings per share will not meet their projections of $6.77, and they will be down, and this price will be down even further. It sells for $111, so I've probably got $11,000 in it. I'm about even. So my inclination is, and it's up today, if it goes up this week and I can get even, I'll get out. Why? Because I think Wall Street is telling me here this stock is going to go down further this year. It is not going to have the earnings that they think they're going to have. They'll actually be lower than the 677, and that will bring the earnings down also in 866. They are openly saying that in the earnings call, the first half of 2024 will be difficult. But we believe the Chinese economy is going to be stronger in 2025, and we believe we will hit our $1.3 billion target. I don't think that's good enough. I really don't. So, because again, that's a 14% increase. And in the past, to grow this stocks, you had to grow the earnings per share by 36, by 98, or 89, 97, 192. I don't think they can do it. And so, again, what I want to emphasize to you is the numbers will give you the direction. And if you took the numbers strictly for what they were, this number came from the earnings call. I learned that on hand, that they believe in 2025, their revenues will hit $1.3 trillion. And this came from the earnings call. I did not know that they did 46% of their business in China, and that's actually down. It was up as high as 60% in the past. And I believe the Chinese economy is going into the tank. You interpret it the way you want and let me know. I'm not getting the feedback I expected. I expected when I put this up yesterday on these stocks, on Apple, Google, Meta, at Air Systems, and Amazon. I thought, well, this is going to be something that people will react to. Not doing. Okay, then the other thing I wanted to show you is the history of this stock. This is a chart. You can see in the height of the EV market, it got up to as high as 195. It's now at 112, so it's lost a good percent of its value. And you can see it's come down right after this earnings call in November of 23, and it's just traded sideways. And in fact, it's near its low. As I say, it's at 112. My cost basis is at 113. I believe I will exit it. I'd again be interested in your input on this, and let's work at this together. If this is something, the kind of thing that you want insights as to why does somebody buy a stock, and what are the particulars, you got two choices: do the kind of research I do, or join our tribe. and come to our stock talks, ask questions, come to our Discord, ask questions, and give input. Come to our website and see all the charts that I just showed you, and as I change them and build on them, because I've only got 4 of those stocks analyzed thus far, so that leaves me about 33 more to go. Okay, I'm Kerry Grinkmeyer. I'm a retired financial advisor. This is my hobby. This is my enjoyment, and I like making money at it. Talk to you again tomorrow.